Hi everybody! In the previous video, we worked on a set of exercises relating to a discounted note payable. In this video, we'll solve a set of contingent liability exercises. The following are selected circumstances relating to pending lawsuits for Arismus, Inc. Arismus's fiscal year end is 12/31/X1. Financial statements are issued in March of X2. Indicate the amount of asset or liability that Arismus would record at December 31st, X1 in connection with these lawsuits. I think you'll find illustration 13-16 in your textbook to be very helpful with this series of questions, and it might also be helpful with the exam. You might consider putting a flag on that page for future reference. Number A. Arismus is defending against a lawsuit. Arismus's management believes that it has a slightly worse than a 50-50 chance of prevailing eventually in court, and that if it loses, the judgment will be $1 million. What asset or liability would Arismus record at 12/31/X1 in connection with this lawsuit? No liability should be recorded. GAAP requires that a contingent liability be recorded on the books when the loss is both probable and estimable. The term probable means more likely than not. In this case, with only a 50-50 possibility of losing in court, Arismus should view the loss as reasonably possible and provide the disclosure in a footnote to the financial statements. Number B. Arismus is defending against another lawsuit. The attorneys have advised management that it is probable that the company will lose in court. If it loses, management believes that damages could fall anywhere in the range of $2 million to $4 million, with any damage in that range to be likely. What asset or liability should Arismus record at 12/31/X1 in connection with this lawsuit? Arismus should record a $2 million liability. The loss is both probable and estimable, so Arismus should record a liability as of 12/31/X1. When no amount within a range of losses appears to be more likely than any other amount, the minimum amount in the range should be recorded, and the possible additional loss should be disclosed in notes to the financial statements. Number C. Another lawsuit Arismus is defending. The company's attorneys have advised management that it is probable the company will lose in court. The amount of the loss was not possible to estimate as of December 31st/X1. At the end of the year, however, but before the 20/X1 financial statements were issued, Arismus accepted a settlement agreement for $3 million on this lawsuit. What asset or liability should Arismus record on its December 31st, 20/X1 financial statements? Arismus should record a liability of $3 million. The loss is probable, and the amount is known before the financial statements are issued. Accordingly, the $3 million liability should be accrued at 12/31/X1. Number D. Arismus is a plaintiff in the lawsuit. Erismus's management believes that it is probable that the company will prevail in court, and that if it does prevail, Erismus will receive a judgment of $500,000. What asset or liability should Erismus record on their balance sheet at 12/31/X1? This is not a loss contingency. It is a gain contingency, but no asset should be accrued. Gain contingencies are not accrued under U.S. GAAP. A disclosure note is appropriate if the amount is deemed material. Well, that's all for this video. In our next video, we'll talk about refinancing current liabilities to hopefully get them classified as long-term debt. See you next time.